right. Hello, hello, hello. Give me 1 second. Let me see. Hello. How's everyone doing? I have a little bit of a different camera because my other camera is not working at this moment in time. Let me see. Let me see how everyone is doing as well. Let me get the chat open. Let's see, let's see, let's see. Huh? We have a visitor. You look amazing as always. Thank you, thank you. All right, hello, hello. Good morning, good evening, good afternoon. How's everyone doing? From Dubai, Magneto. Love to see it. Hello, Trading King. Ask any question you want, pets lovers. That's what we're here for. Hello, Island. Just want to say thank you so much for your videos. And just for like, I now start winning trades. God bless you more. All credits to you, my friend. Hello, Margie. Christine, Carlos, Selim. Hello, hello, hello. How are you doing? How are you doing? Let's see, let's see. Hello, Mihai. How are you doing? What I like to do, Mihai, in even for intraday trading, if we're scalping, doesn't really matter, whatever it is. I like to have 2 RR and then also an external target, if that makes sense. The closest target, always. Hello, Daniel. I'm doing good, Smile. Thank you, thank you, thank you. I'm doing good, doing good. Why are my STs failing and yours not? Is it a coincidence? No, it's usually experience and knowledge. Usually STs failing is, and the reason why I think STs are beautiful, but not necessarily the first thing you should start looking at, is because of probabilities. Usually that depends also on high probability scenarios. Entries failing is not necessarily because of the lower time frame, your entry is not good enough. It's because of the place where you enter, if that makes sense. What's your laptop? This is my monitor, actually. This is my monitor right here. Yeah, my camera is empty. I can try it again. Give me 1 second. Let's see. Now, it's probably going to go off any second again. There it is. That's better. That's better. All right. How does that look? I'm doing good. Thank you. Thank you, thank you, thank you. It could be the case that my camera again turns off, but then we'll switch back again. No worries. How many pairs should one watch? Depends on the trading plan. What do you think about weekly profiles? Weekly profiles happen regardless whether you pay attention to it or not. So it's not that relevant in my opinion. Not anymore, at least. I took my first payout, minus $200 from 5K account, but eventually lost, or $200, excuse me, from 5K account, but eventually lost the account on FOMC day, got it greedy. Should have avoided the news trade, but anyways, first payout gave me a lot of confidence. Love that. Love that. Of course, FOMC day, avoid it. But it's a learning experience. See it that way. Take the positive away from it. Nice, nice, nice. Hello, Franz. Hello, Tarlan. Arthur. Your RR shining. It's probably just probably just the light settings that are not good. Nice, Sudip. Just got your free MMT journal template through email. Nice, 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 nice. Love to hear it. SMC is good or ICT. I believe they are the same thing, my friends. But it depends who you ask. Depends who you ask. All right. First of all, before we go any further with the questions, let's dive into the forecast as well. Now, I have something very important that I wanted to go over. We'll go over it at the end of the forecast as well, a little bit more in depth. But Let me grab this pen. There's something in the MMT that we know, and we know when there's more likely to be good price action, in other words, a good week, and we also know when it's more likely to be a bad week. And it's not something special, it's not something crazy secret or anything. I'll tell you it in this forecast as well, but that is something that you want to pay attention to. Now, what I'm going to tell you, you should still take it with a grain of salt. And what I mean by that, only look at your own data and see if it confirms it or if it's the complete opposite. I want you to see it as a stereotype. So just something to take into account. Don't take it as a holy grail, if that makes sense. It's very important to understand because every trading plan is a little bit different and your conditions might be a little bit better for you than someone else, if that makes sense. But what we're going to talk about, and we've talked about this before, is disturbances. Let's see. We have that, and we have good. Don't pay attention to my handwriting, please. It's not the best, I know. So when we're talking about a bad week, let me see, like that. When we're talking about a bad week, we have a lot of disturbances in price action. So let me show you my screen right there. Okay. If you take a look at the left side of the screen, then you'll see the economic calendar. Currently, we're looking at the economic calendar from the previous week. So the current week that we're in, the week that we have had. And we see that we have FOMC meeting minutes right there, which is one of the big 3 news events. We also have NFP right there. And then next week, so the week that we are heading into, we also have CPI actually. Those are what I like to call disturbances. Now, it's very important to understand that those disturb price action. And what I mean by that is NFP brings in quite a lot of volatility into the market. But it is coming at a cost that the day before and the days before even are usually a little bit less volatile, more difficult to trade, if that makes sense. So it's not consistently volatile. We want to find consistently volatile weeks. Again, we're going to dive into that a little bit deeper as well, but that's just the start that we need to talk about. All right, let's save this here. We're going to touch on it more in depth afterwards as well. First, let's dive into the price action right here, what we can expect for next week. Okay, what do we see? For this week, the upcoming week, please remove the ad. I can't. Okay, well, we see right here, on Sunday we have JPY bank holiday. Monday we have no news. So Monday, that means I'm usually just on the sidelines and I'll wait to get involved. Then Tuesday we have PPI, which is good. But on Wednesday we have CPI, which is again that big 3 news event, which is a disturbance in price action. That's very important to understand because that right there is then also what I would like to avoid. I would like to get involved later on in that week, meaning after CPI release. After CPI release, that Thursday, that Friday, even on the Wednesday itself, and the weeks after, we have no disturbance in price action. So if we take a look at next week again, we see this is a really good week, upcoming week right there. But right here, first we have to deal with this week, of course. Then CPI right there is the only thing that we really have to take into account. Very important to understand. Don't, like someone mentioned, don't get a payout and then afterwards blow the account because you're trading FOMC day or something like that. That's very important to understand. Let's see. All right, what do we have? Then if we go to the price action itself. First, we start off with the dollar itself. If we take a look at the dollar, we take a look at the monthly, we have been bullish overall on the dollar, like we mentioned as well in the previous forecast. I believe we can simply look to continue higher as well right here. If we take a look, then we are running into this area. And what is that area? That area is a fair value area, as I like to call it. Now, we also saw previously that the high of the week, last week, so not the previous week, the week that we're in, the last week, was created at the nested fair value area that we talked about right there. So we can pinpoint the highs and lows of weeks based on PD rates as well. Now afterwards, right here, we can look to continue higher. We have taken out this rejection right here. And currently, I don't see any reason as to why the dollar might be bearish. So I want to, well, if the opportunity is there, I want to abuse longs on the dollar right here. And almost go full margin. Of course, that's exaggerating a lot, but I want to see if there are any opportunities. I want to capitalize on them. Very important. To the next target. And what is the next target? The next target is this right here, which is a high, a swing high. That is the first target for this week, in my opinion, right there. But we can aim towards. So any daily fair value gap that we might be creating right there on a Monday, again, the timing plus price action is very important. And the timing is the news factors, is the days factors. So what I mean by that is Monday, we don't have news. It could still mean that Monday might still have some volatility left over from NFP overall. But if Monday doesn't have any news, then we might also see a Monday consolidation. A Monday consolidation in the third candle of a potential daily fair value gap, that's quite nice. We can potentially continue higher from that to then target these highs right there. Will it be that straightforward? Most likely not. We have to react. We have to see what we want to do. But what we want to do is we want to understand that the bias is bullish on the dollar. Okay, all we have to do, what's left for us to do, is find a clear narrative area that we can continue higher from, which is, in my opinion, either a daily fair value gap or going to be a 4-hour fair value gap like we see right here. That could be very interesting to continue higher from. Overlapping with the fair value area looks very good. Looks very good, in my opinion. All right. Then the indices. The indices have been arguably following through lower right here. On Russell, we see lower prices as well. We're in the third candle of a weekly fair value gap potentially. Overall, a daily fair value gap to potentially continue lower from it, overlapping with this fair value area. That could be quite interesting to look for lower price as well. ES and NASDAQ, actually, what we mentioned in the forecast last week, we reached this daily fair value gap right there. So we had some bullish price action. Then this daily fair value gap, if we take a look at it, what happened? We were respecting it. So two-candle rejection right here never disrespected that fair value gap. So here we can continue lower from it, and we do right there. We are reaching these lows. Now it will be interesting to see what we can do with this daily fair value gap that is going to be created as well. We can continue lower from it, or if we will disrespect it, to then continue higher instead. That will be quite interesting. That's for both ES, NASDAQ, and YM. React to the daily fair value gap that's going to be created. That is going to tell us a lot. DAX. For anyone who trades DAX, and there might be some DAX traders right here. I used to trade DAX quite a lot. DAX, it's very important to understand that DAX is sort of like a long lost brother of the other indices. And what I mean by that is DAX follows the other indices. It's very much correlated. So whatever ES or NASDAQ is going to do, that is what DAX will follow, if that makes sense. So DAX right here on its own, we could argue, well, higher prices might be very interesting. So towards this new all-time high. But if ES and NASDAQ are showing potential bearish price action right there, and they want to continue lower, then a very simple mathematical equation, if they are correlated, well, a bullish plus a bearish scenario is what? Consolidation right there. So if DAX on its own wants to potentially continue higher and the other indices don't agree, so they are potentially going lower, then you will most likely see a consolidation right there on DAX. That's very important to understand. So for DAX, higher prices, not that interesting to me. Could happen, but it needs the other indices to also agree with it sooner or later. Australian dollar, US dollar, we had a sting into the, like discussed in the previous forecast as well, we had a sting into the weekly value gap and into the, of course, weekly fair value area right there, which we respected, continue lower from. Now the objective of price is to create a new fair value gap as soon as possible. So if we have any daily fair value gap, any weekly fair value gap, it could be quite interesting eventually. I do want to first understand what targets we are dealing with right now to pinpoint it a little bit better. Let's see what we have. This fair value gap right there. Also have this fair value area. Let's put it like this actually. A moment, please. Okay, let's see where we're at. This is just below the low, so that can be removed. And afterwards, we have this next daily fair value gap right there as our target. So that could be quite interesting for the daily, even the 4-hour right there, to deliver lower towards those targets right there. Euro US dollar. Let's see what we have. Let's see. Again, we have been continuing lower for quite some time right now, but I do want to pinpoint a closer target so we can know what we can expect. We have reached that low right there. Okay. Afterwards, we have this daily fair value gap. So again, a new daily fair value gap right here to continue lower from would be ideal in my opinion. And that's what we're going to see a lot on the dollar right there, on the majors as well. Ideally, having a new daily fair value gap that we can continue lower from towards, again, lower targets. Let's see. Reach that fair value gap right there. Okay. That swing low could be the next target. And eventually for this week, we have these major lows right there. That could be the next target as well. That does look quite interesting as well. Third candle of a weekly fair value gap. How do we know if we are going to create a consolidation or if we can simply look to continue lower? It's, well, simple. I wouldn't say it's simple, but the process of looking at it is quite straightforward. And what I mean by that is we need to understand that if we are going to create a daily fair value gap, as long as we get a perfect rejection from the daily fair value gap, so we're not struggling to continue lower, we're not struggling to create new bearish fair value gaps, then we can simply expect this third candle of the weekly fair value gap to continue lower and for this right here to become a breakaway gap instead. That's how we can arguably somewhat predict if it's going to be a breakaway gap or not, by reacting to what the daily and the 4-hour right there wants to do. Now, if the daily and the 4-hour is really struggling to continue lower and we don't create new bearish fair value gaps, then look at a weekly fair value gap to continue lower from next week. New Zealand dollar, US dollar. Let's see what we have. That low right there. On the daily, a new daily fair value gap right there. Even a 4-hour fair value gap to continue lower from. That could be quite interesting since the target is already quite close. US dollar, Canadian dollar. All right, let's see what we have. So we were sweeping the previous candle low, which on the daily is just, again, that swing low, of course. Now right here, if we can continue higher, but I would like a new fair value gap to work with. So a new daily 4-hour fair value gap to work with to continue higher from. Overall, also very much bullish. US dollar CHF, very similar. I would like to have a new narrative area, fair value gap to continue higher from. Same for US dollar JPY right there. Looking at gold. So gold was very interesting actually last week. Was super, well, not super, but was okay price action. Was quite interesting. Now, if we take a look at gold right here, then we are also about to create a daily fair value gap, arguably. The Monday potentially consolidation to then continue higher from it. That does look quite interesting to me. And again, I would like to wait for a new narrative area to continue higher from. Same on silver, but on silver, what do we see? Silver is weaker than gold right there, which means that silver right there is less interesting if we are talking about longs. So if we want to buy one of the metals, then gold right here is more interesting heading into next week with these highs as a potential target. Bitcoin. So Bitcoin, very similar to what we talked about on, for example, GU. If we want to notice if for example, this monthly fair value gap is going to be a breakaway gap or not, then we need to study what the time frames below that want to do. On the daily, we saw right here, on this Tuesday, we had a huge aggressive retracement. Back into that fair value gap. That fair value gap is not interesting to trade higher from because we have this swing low before it right there. So what we see right here is arguably potential consolidation. But not only that, we see that we have an aggressive retracement back into potentially the monthly fair value gap right there to then potentially continue higher again if we get the proper rejection to a new all-time high right there. Let's wait and see if we can do that, but I would want to wait for a retracement back into the monthly fair value gap. Now, does that mean, because this is quite a common thought process, does that mean that, for example, trading towards a monthly fair value gap like this is a high probability and is something you should do right there? No. Let me explain why. Because trading towards a fair value gap is always going to be lower probability than trading from a fair value gap. That's just a quote that we have in the MMT. And the reason why that's important to understand is because overall we are trading a bullish market. And in a bullish market, retracements, well, in a bullish market, for 90% probability, we might continue higher. So going higher is almost the guaranteed factor, if we understand that. But retracements are not guaranteed in a bullish market. Now, if we do get the retracement, then we can look to get involved. For example, from this fair value gap right there. So this right here, this move higher is higher probability. But trading against this trend, thinking that we need to trade back into the monthly fair value gap, that is lower probability right there because you're trading against the overall idea of higher prices right there. Very important to understand because a lot of people do tend to make that mistake. Crude oil. Let's see what we have. Crude oil. Finally, some trending conditions, which is great. We have reached this high right there, which is some liquidity. So we're currently rejecting from that liquidity as well. I just want to see what we can do with the daily fair value gap that we're also going to create right there. And that will set the tone for the remainder of the week. Now, what do I mean by that? Because I've mentioned that quite a lot throughout this forecast right now. Those daily forecasts or the daily fair value gaps after creating those expansion phase candles, Monday doesn't have news, then those daily fair value gaps are going to be crucial. Why? Because when we create this daily fair value gap, if we respect it right there, we creep back above this high that tells us that we are running that high. Meaning that for the remainder of that week, we can simply look at higher prices and continue higher right there. Now, let's say that doesn't happen and the opposite happens. And instead, we had this fair value gap, we tried to push higher from it, but we failed to do so. Then we can start looking at lower prices for the remainder of the week. Right there. So those daily fair value gaps, they set the tone for that week, for the upcoming week, which is very important to understand. Now, if we don't do anything regarding that, and instead we are in the middle and we create a consolidation, then we need to start zooming out and understand that we are in the third candle of a weekly fair value gap and that we might want to wait a week to then continue higher from it. So there's essentially 3 objective scenarios that you can pay attention to for any pair, for any instrument. Bank Nifty. Bank Nifty had a sting into that weekly fair value gap, continued lower eventually, targeting this low. And I do believe that we are currently looking at potentially lower prices as well right there. Now, what we're looking at right here is on the daily, once we reach this low, we had some signs of potentially sweeping it, so potentially continuing higher. We failed to follow through. Instead, we keep running that low, which means that we can look at a lower target as well. So any daily fair value gap that we might create, and also, again, in the weekly third candle right there, it's important to pay attention to continue lower from as well. That could be quite interesting. All right, let me see. Let's go over questions. Let's go over the bad versus good weeks as well. Important to understand. And let me turn on my camera again. There it is. Hello, I'm back. Hello, thank you for Trading Journal. My pleasure, my pleasure, my pleasure. Have a good day, Trader Boy. Great to see you. Yeah, webcam, yeah, my camera is empty. Well, it is what it is for now. Good morning, Arjo. US30 is close to a 3-month fair value gap. We could 100% see a reaction of it to the upside. Thoughts? I personally don't really use the 3-month fair value gaps or any other time frame than I have right there. And so we definitely could see a reaction overall. Yeah, I do agree with that. But I would like to wait until we see something on these time frames, if that makes sense. I can check it for you. Let me see. Yeah, we could see a reaction. Yeah, it is quite an obvious fair value gap right there. We definitely could, for sure. And we've also reached these lows right there, so it lines up with it. Lines up. How are you, friend? I'm doing good, Lawrence. Thank you. How are you, my friend? Doing good, Hassan. Great to see you as well. Great to see you. Thank you for the analysis. Really happy that my analysis is very similar, if not exactly the same as yours. Love that. Love that. That's good. That's good. That's nice. I would always advise, if you are going to come here to the forecast, maybe 30 minutes before or just before we start the forecast right here. It's always good to do your own forecast, your own analysis, and then compare it. Not, I would always advise for a better, to learn faster, if you first watch this forecast and then do your own forecast, you're more influenced by me, if that makes sense. So it's less effective. So I like that a lot. Great stuff. Hello, Trader Law. How are you doing, sir? Let's see. Let's see. Is it safer entering after confirming intermediate high, intermediate low, instead of depending on only SC? Yes, 100%. I also need you to understand that because a lot of people, they see ST and they think, wow, this is what's going to help me to profitability. And to a certain degree, of course, it might be a small part in the overall bigger picture. Yes. But you need to understand, if you're just starting out, I would just advise trade the ST and then the confirmation after, which we call the ST plus RE. I personally have always traded the ST plus RE. I currently trade a trading plan based on candle signs fully, but just the ST when you're just starting out is usually not necessarily the best thing to go for, which we also mentioned in the MMT. And the reason why that is because usually people struggle to find a high probability fair value gaps to trade from, which is where the fair value gap, a video that we have uploaded yesterday, helps with a lot. If you can always find a high probability scenario to trade from, so for example, let me find the fair value gap just for the sake of an example. If you always find a good fair value gap to trade from, like this fair value gap, and then you go into the lower time frame to 5 minutes to confirm it with a sharp turn, then it's perfectly fine because you don't need much confirmation because the hard work is done on the higher time frame. But if you struggle finding high probability fair value gaps on the higher time frame, then you're going to need a little bit more extra confirmation on the lower time frame, which is where an ST is not necessarily the best thing you want to look at, if that makes sense. Let's see. My pleasure, Ashkan. My pleasure. If the weekly is a consolidation, can we trade on the 5 minutes? You could, but that's a specific trading plan on its own, where you are trading consolidations. You could. I personally wouldn't necessarily advise it, if that makes sense. Unicorn is just it's just a fair value gap with a fair value area. Unicorn sounds so silly, to be honest. Like I'm not trying to blame it or anything, but unicorn sounds extremely silly. What do you trade? I trade unicorns. Like, wow. I use fair value gaps mostly, my friend. A nested fair value area. Nested fair value area is simply a fair value area within a bigger fair value area. So for example, this right here is a nested fair value area right there, because this fair value area is within a bigger fair value area right there. That's what a nested fair value area means. Yeah, it sounds like for kids. It sounds like I don't know. There's just something off about it. There's just something off about it. It's just a bit odd to me. What is ST plus RE? So if you want something better than a unicorn, which I think is a little bit overhyped, a unicorn. If you want something better, then you should start looking at an ST plus RE. So what is an ST? An ST is essentially the same thing as what some may call a unicorn as well. But what you want to look at is if we retrace back into this fair value, for example, you wait for your entry confirmation. And the first thing you want to look at, if you go down time frames right there, is to wait for an ST right there. Now, the first thing that happens is ST. So this is the fair value gap in, fair value gap out right there. The first fair value gap is not necessarily always the best. What you want to wait for is when we create a retracement and create a new fair value gap right there. That's when, small insight, small golden nugget, when order flow is confirmed towards your side of the market, which we discuss very much in depth in the order flow module as well in the MMT. It's very interesting. So this right here is extremely high probability. Doesn't have to do anything with a unicorn, whatever it may be, with a unicorn, with a rainbow, with whatever you want to call it, with the golden pot, the dwarfs. Doesn't have to do anything with that. I trade Batman and Spider-Man, yeah. It's so silly. It's so silly. How can you, I just don't understand. Maybe I'm ranting a little bit, but how can you, the man who figured out the algorithm and the man who who created the algorithm, and you call a simple fair value, you call it a unicorn. I don't know, but maybe I'm just ranting, but it is what it is. It is what it is. Maybe I'm just a bit bitter. Oh, you sound like a marketer right now. Unicorn is higher probability than ST. Okay, okay. Says the person that has zero data backing it up to make that claim. But that's whatever you can think of it, my friend. If you see that secondary value gap created on the 1 minute opposing your position, is that a good sign to set break even? Yeah, that's what I don't like. That's what I don't like. Yeah, well, Japan, Nazu, that person says a lot. That person also, I believe, copied the ST and called it a different name and made a video about it. So don't take that person too serious, I would say. I am not Jesus, my friend. I am not Jesus. No, no, no. No, I am not. Not at all. Do you have a plan or a module in the MT or something that chooses the right stock to invest, like the ones with the high potential? We want to do a stock enrollment or stock module actually in MT as well. Yeah. Let's see. Two candle rejection entries is pretty straightforward. It's pretty straightforward, my friend. If you understand two candle rejection in itself and what the next candle should do, then you can simply enter from it. You can get very, very, very creative with it if you want. Yeah, it's crazy, Japan, Nazu. Like, yeah, that one. I don't want to repeat it because I don't want to give too much attention to it, but that's crazy. Like, you need to understand that it's a bit frustrating because a lot of creators you see on YouTube, etc., they were simple students from mine. And they take, for example, a concept like an ST, and they just name it a little bit different, and then just go promote it as their own thing, and then start their mentorship, etc., etc. That's a bit crazy to me. It's a bit crazy to me. You can say I copied things from ICT as well, but I always gave credit to ICT, first of all. And next to that, it was my own understanding. And some things that I see is just not their own understanding. It's just simple for me. Yes, Mohammed. Yes, yes, yes. And it, again, might be a little bit ranting again a bit as well, but that's just a bit annoying to me. It's a bit frustrating. So I would always advise go to the source. If you want to understand ICT, go to ICT himself. If you want to understand MMT, then go to us, if that makes sense. Yeah, could be, Taban. Could be. Hello, I am Trader. How are you? Doesn't token rejection negate the ST entry, don't you think? No, because it's the logic. As in all the concepts, they tend to go hand in hand. So what I mean by that is, if you have token rejection, for example, what I mean, this daily candle, within this daily candle, you have a lot of fair value gaps on the lower time frame. So a sharp turn entry right there on the lower time frame and the right there, this is just one bigger candle on the higher time frame, if that makes sense. So if you see a reversal like this, then what is this reversal made up of? That reversal, we go and look at that lower time frame, then what do we see? We see fair value gaps first going lower to then fair value gaps going higher right there. So it's essentially the same thing. Is it enough to be a YouTube student? Yeah, for sure. For sure. For sure. Why not? Why not? The MMT is, you need to see the MMT as just a fast track. It's more structured. It's a little bit more insights. We dive more in depth into certain concepts as well. But for YouTube alone, that can be enough. Yes. Daily buys, how to perfect that gives it the holy grail already. There's no holy grail to that, my friends. There's no holy grail to anything in trading. And what I mean by that, and if anyone is telling you there's a holy grail to anything, then they're just full of shit, arguably. And what I mean by that is daily bias, you need to understand for every single concept you use, that concept alone is not going to play out 100% of the time. You need to understand where to use the concept. That's very important to understand. So a daily bias is very clear when, for example, we're coming out of a higher time frame PD ray. For example, right here, when we are touching into this fair value gap right there. Coming out of it, we have a context area. So the daily bias for the next coming days is very clear towards that high. The next daily bias towards this high is very clear right there. It's the moments where the daily bias is very clear between two PD rays. That's very important. Yeah, perfectly said, Carlos. Yeah, remember everybody, price is always moving towards a PD ray. It's our job to find out which PD ray we are moving towards next. Yes, that is very important to understand. MT is more clear, simple, and to the point, and MT over ICT. Thank you, Kakarot. Again, everyone can make up their own mind if they want to, of course. Let's see. Do we avoid trading on those days with disturbances, or could it push price towards could it push the price towards we want? It could, Christine. But we need to understand trading is not only about a bias. So what I mean by that is, for example, again, what makes a bad week versus a good week is a good week has consistent volatility. So what I mean by that is that it isn't disturbed. If we have, let me draw it. If we have a lot of consolidations right there, and then all of a sudden we get a lot of volatility in the market, some might see it as, well, this market is extremely volatile. And it might be the case, but you still might not be able to capitalize on it because it's not consistently volatile. Consistently volatile is the following, where we consistently push higher right there without any disturbance, which is that consolidation right there. Trading is not only about getting the direction right, it's also trying to get involved. So you need a stop loss, you need an entry, etc. And that stop loss and entry needs to be quite accurate if you want to be able to capitalize on it, because your stop loss should not get taken out before we, of course, hit our take profit right there. That's what trading is, very simply said. And might seem very simple, but a lot of people ignore that, because for that, the direction alone is not enough. You also need to have clear price action on the lower time frame to get involved. So here, a good week is something like this, where we don't have a disturbance in price action. So a disturbance, yes, it could push price towards the targets you have, etc. But you might not be able to get involved, or you might get taken out before we hit the take profit. That's why in some cases, even though we know it's going higher or lower, it's still not worth trading, if that makes sense. That's a really good question. That's a really good question. I need a tutor on Forex. I haven't made any significant process. You can find a lot of people here on YouTube for free. I would first advise, before you buy anything, I would just say there's a lot of free stuff here on YouTube as well that you can learn from. And then see if that works, that free stuff for you. If it does, you might want to learn more from that mentor, etc., etc. But there's a lot of free stuff. For example, you are currently at someone who teaches as well. Do you think about to make a vlog about your daily lifestyle? No. My my daily lifestyle is also not that exciting, to be honest with you. It's not that exciting. I don't have fancy things, or I don't go to Miami to party or anything like that. That's not me. So yeah. Yeah, true, Hassan. True. Only thing how I could see it interesting is potentially the routine that I have, but for the rest, I don't know. It doesn't really speak to me, if that makes sense. Could motivate us. Yeah, well, if you need and I always like to think, if you need fancy cars, if you need fancy watches to motivate you to be a trader, then you're probably in it for the wrong reasons in the first place. So you're not going to make it that far, if that makes sense. Now, if you're motivated by having good education, etc., you see a video and you think, hey, here's another insight that can help me again. Now, that is what's going to get you a lot further in life, in my opinion. But if you're just in here for, oh, it motivates me to see Lamborghinis and Ferraris, etc., then sooner or later there's going to be a pushback, and you're going to struggle, and you're just going to give up, if that makes sense. Because you're not in it for trading, you're in it for something else. If that makes sense. Thank you, Tamang. Thank you. So no Arjo ladies and Lambos. Yeah. I'll make a video, day in the life of a millionaire forex trader. You'll see me with a nice car on the back. No. Love to hear it, Asim and Kelvin. Love to hear it. My pleasure, my friend. Do we need to have red news for enter swing trade? Not necessarily. So the way I see it, it's very similar to what we talked about actually in the bad versus good week, that consistent volatility. If you're a swing trader, you don't necessarily need news that given day. And what I mean by that is because you can survive a day that is a consolidation as a swing trader. So for example, right here, if I enter this right there and I have a target of 1 to 2, just a simple example, this right here doesn't need immediate news that same day, if that makes sense. And the reason why that is because you can survive a day like this where it's a consolidation. Now, the reason why usually intraday traders need some kind of news is because if you trade the 5-minute or the 50-minute, then you can't survive an Asia session where we fully consolidate, because then it might hit your stop loss before we move to take profit. So you need to survive those periods. And that's where news comes in. That's where the volatility comes in. So what tends to happen is that we have a consolidation first, right there, and then we move higher right there. And for a swing trade, that of course doesn't really matter. But for lower time frame, intraday, etc., it's a lot more important. Maar hou je het meest van swing trade of day trade of intraday? It depends. I personally, so the question was, what do I prefer? Swing trade, day trade, or intraday? I personally like day trading, I believe, the most. I'm not necessarily the best at swing trading. Intraday trading is all right, but day trading, so for example, 50-minute, 5-minute entries, just for a London or New York session, I like that the most. I like that. I enjoy that the most. What's the best model that will give you a setup every day? Is it market maker model, one of it? So I'm going to push back quite a lot right here, because I want everyone to have the right mindset, which I think is very important, because a lot of people tend to have quite a wrong mindset when coming into trading. So I want to show you the reality of things. And that is, the best model that will give you a setup every day is already the wrong mindset when you want to look to get into trading or find a trading model in itself. And that might be disappointing to hear from me, but that's just the reality of things. There's not going to be a model that's going to provide you 2 to 1% every single day. If you can aim for 3% in a month, 3% in a month, then you are outperforming, well, arguably a lot of people in the world. That's what I would aim for. So getting your expectations correct. It's a marathon, not necessarily a sprint. So again, I'm sorry if that bursts your bubble right there, but I don't have a model, and no one in the world, well, maybe some person, I don't know, somewhere, but no one in the world, at least not me, has a model that can provide you with profits every single day. And even if you have, then sooner or later, you're going to lose on days as well. If that makes sense. That's just very important to understand. New Zealand dollar JPY is bearish, in your opinion. Let's see, my friends. JPY pair is a little bit tricky, but overall, New Zealand dollar JPY, I do have to say, credits to you, my friend. You did pick the right one. Because if we take a look at the JPY pairs right here, then we do see that from all the JPY pairs, New Zealand dollar JPY is arguably the weakest one, which is good. So New Zealand dollar JPY does look more bearish than bullish. Yeah, that does look good. I'm trying my best, Percy. Trying my best. Thank you. Let's see. That actually resonated very well when I'm on a streak, is when I start making bad decisions, but when I trade with the goal of being positive for the week, that is when I have my best months. Yeah, I think it's very important to be process orientated. Again, what I mean by that, if you want a good week, if you want a good day, if you want a good month in general, there's going to be bad days throughout the month, but if you are process orientated, as in, can I always be on top of my game, find the highest probability trade ID that I can take, that I can find, perfect. Then the outcome is going to be quite good. But if you're so focused on, I need to make profits every single day, I need to be profitable right now, you're not process orientated anymore, and that's going to haunt you. And I also think if you start winning a lot, and I always like I like to compare it to if a person says to you, hey, let's go to a dangerous place in the world where you might get robbed, you might get kidnapped, whatever it might be. And you go there and nothing happens the first time. You're a bit anxious, but nothing happens. Then the next time, the second time you go there, also nothing happens. You're starting to get more comfortable in that place, in that dangerous place. Then the third time you go there, you're getting even more comfortable. Now, the more times you go there, eventually there's going to be a fifth time, a sixth time. And at sixth time, you're getting that comfortable. Well, let me now take my watch. Let me now take my phone out, etc. Because nothing is happening to me. You're getting overconfident. And that overconfident, that is the day when you get robbed. It's the same exact thing in the market. When you start winning, you're on a winning streak, and eventually you get more comfortable. You think, this is easy. This is getting a lot easier for me. And eventually the market is going to rob you of all your profit because you're not paying attention anymore. You're getting overconfident. You're getting too comfortable. The same thing. That's how winning streaks end up in blown accounts. That's very important. How many trades do you take in a day? Well, -5. No. I'm lucky if there's even a trade in a day. But I'm also more currently focused on more so swing trading, etc. So I don't have a lot of setups. If there's a good trade in a week, then I'm happy with that, if that makes sense. I didn't take a trade this week, my friend. Didn't take a trade this week. I'm currently still getting someone in the flow, but those disturbances and understanding what a good week and a bad week, NFP week and CPI week, FOMC week, those are weeks that are not good for me, for my trading plan. So the weeks afterwards and the weeks before it, those are better for me, data-wise. Or sometimes I wonder why you don't talk much about AMD. Is it because your logic and steps maximize the chance of being in the M? Yeah, inside trading, you're on the right path. So why I don't pay attention to power of 3, why I don't pay attention to the weekly profile anymore, not necessarily. In some cases, yes. Why I don't necessarily pay attention to AMD is because if you have a PD ray or a premium or a discount rate, it all starts with PD rays. AMD, power of 3, whatever it may be, market maker model, it all stems from PD rays because we're going to target PD rays and we're also going to continue lower or continue higher from PD rays. So when you have a PD ray, like for example, this swing high right here, then the AMD that happens, so the accumulation, the manipulation, distribution right there, that automatically happens when looking at that PD ray. So you don't necessarily need to pay attention a whole lot at that AMD, because that AMD happens because of that PD ray, if that makes sense. So the PD ray is the overlapping factor, if that makes sense. And in some cases, it does help people. I can understand that. Personally, for me, it's a little bit extra, not necessarily needed, if that makes sense. Usually, profit distribution works a little bit different with investors. It really depends. In some cases, I would argue it's even more interesting to trade for prop firms instead of investors in the beginning. If you can, for example, go from 0 capital to 100k capital, usually it tends to be a little bit more interesting to go with prop firms, depending on the investor rules as well. Because what tends to happen is you get a performance bonus from the investor, and very plainly said, the profit split you might get from an investor is way lower, like something like 15%, 25% even, depending on the rules that you set, drawdown wise, etc., the risk you're willing to take, etc., etc. So in those cases, actually prop firms tend to be a little bit more interesting. Now, of course, prop firms, there's, well, not necessarily a limit, but you're somewhat limited to what you can do. So if you're looking to go into 7 figures, etc., then it might be interesting to start taking a look also at investors. Are there any books you can recommend for trading psychology? The Mental Game of Trading is a really good one. I personally am not a big fan of, I think the Mark, or what's his name? Mark Williams? The Robert Williams? I'm sorry, I completely forgot his name. But he also talks a little bit about trading psychology, but I think that's very, like, it's very top of the iceberg stuff a lot of the time. And in the beginning, it's good that you need to think like a casino, etc. That's great. But if you really want to tackle your struggles, Mark Douglas, that's the one. Mark Douglas, thank you. Mark Douglas, in my opinion, talks very baseline about stuff. So very, very beginner friendly, which is good if you're just trying to get into trading psychology for the first time. But if you really want to tackle your struggles and overcome them, then I would say Mental Game of Trading is top notch, in my opinion. Yeah, trade like a casino. And of course, that makes sense, but it's not like trade like a casino. Wow, all my struggles are gone. If that makes sense. That's nothing against Mark Douglas. He's arguably one of the best in the space when it comes to trading psychology. All right, when do I know I'm ready to go live and trade after studying your concept for 3 months? You're never going to be ready to go live, my friend. And what I mean by that is live is this scary thing. Live trading is this scary thing that you sooner or later just simply need to start doing. That is very important. And it's like jumping into the water for the first time. You might not remember it, but it's a pretty odd feeling, right? Especially if you don't necessarily know how to perfectly swim, etc. You think you need more books to learn how can I swim the best, how can I have my feet the best, my arms, etc. It's just, you need to jump into the water sooner or later. You need to have that near-death experience to learn from it. And the reason why I think it's very important, if we compare it to backtesting, and people oftentimes say, and I can understand that, people oftentimes say that I have quite a radical mindset about that, quite a not beginner friendly, and I can fully understand that. I can understand arguments on both sides, but I think backtesting, demo trading, they don't give you the real pain. If you buy a funded account and you know that money is valuable to you, then you bet every loss that you take, you are going to dive into that loss. You are going to understand it very deep. You're going to try everything in your arsenal to not have that loss happen again. So you're going to learn from it. That pain that allows you to learn from it. And that's very important in my opinion. So I think live trading, not financial advice, should ideally be done sooner or later, because that's where you really start to learn. But again, that might be quite radical. I can understand if you think that. But It is what it is. Yeah, it is what it is, Makosa. I try not to get too crazy about it, but it is what it is. Meme coin. Well, I'm not sure if if the concepts are necessarily suited for a pump and dump. So I'm not too sure. On something like Dogecoin, we actually do tend to look at it, but overall, yeah. Yeah, I'm not sure. It's not necessarily something you would want to trade, in my opinion. Yeah, it's true, the one. True. It's Jared Tendler. Yeah, that's the one. That's the one. That's the book. Yeah, correct. Correct. Let's see. Let's see. Let's see. Let's see. Let's see. As an intraday trader, is it really necessary to look at the monthly chart? Yes, but not like you don't need to open the monthly chart every single time you start looking at a trade ID or you open a chart. And what I mean by that is, as an intraday trader or a scalper even, the monthly chart is also important. But that's just purely for the fact that you don't get blindsided by it. So you don't miss, for example, a monthly fair value gap right there that we tap into that we might want to continue lower from, etc., etc. That's very important to understand. But for the rest, you only need to open a chart realistically 1 or twice a month if you need a reminder. But for the rest, you don't really need it. Let's see. Let's see. El Clasico tonight. Maybe I'll give it a watch if I do have time. Who are you supporting, Lazy? Who are you supporting? Real Madrid or Barcelona? See, I saw someone mention. Yeah, that's true. That's true, Daniel. Yeah. I wanted to go over that. I was looking for it. Yeah. The thing is, you do need an edge before you care about psychology. And most traders lack the edge and care too much about psychology. That is true. That is true. That's true. I think sometimes I see people mention as well, psychology is not important, and I don't really agree with that. But I do agree with the fact that you do, of course, need to understand to a certain degree the concepts before we start to work about psychology, etc., etc. That is true. Barça, okay, Barcelona. Okay. Madrid, okay. Nice. Measuring gaps, no. I personally don't teach that, no. 100k is okay to start compound my account. It's a great start. I think if you take the minimal risk you can take on a 100k account, it's great to start building some live experience. Again, also what I need to mention, building live experience doesn't need to have to be on a 100k account. Can be the smallest account. As long as there's something on the line, then that's good, in my opinion. Nice bet, man. Nice. Alright, did you do your trading journey alone? I have like friends and parents who don't really get that. I spent so much time on trading. I stopped explaining them why, because they will never understand. Yes, Japan. That's very extremely relatable. And my parents always try to understand what I did, but again, I think a lot of people can also understand parents are just parents and they always struggle a little bit with what you're overall doing, etc., etc. So I was also very alone in my trading journey. Yes, I did have a very lovely group which is named Spectre, where I was with a few friends that I met along the way. So I wasn't completely alone, but overall, yes, it was a pretty lonely journey. But I don't really mind it. I'm quite good, to be honest, being alone. I like being alone. I'm quite the introvert. What is edge as per you? That's a good question. It really depends. Because edge, I think edge very simply said is that you are more likely to be profitable than not, in my opinion. But there's multiple ways of getting towards that edge, I believe, because you also have people that are completely objective. So then it becomes more so about mathematical things, etc. But you also have people that are very experienced, that just know the market like the back of his hand, etc., that also have an edge in that. So getting to that edge is up for discussion, I would say, up to debate. It's a good question. I like that. Most profitable trading concept. I'm not sure. I wouldn't say fair value gaps are the most profitable trading concepts. Not at all. And the reason why I say that is because it really depends on who you ask. And for example, the support and resistance people, they also can be extremely profitable. So it's not necessarily one concept that really is the most profitable, and that's the one you should always use. Even if you decide to use indicators, you can become profitable. And more profitable than someone using unicorns. Let's see. Order flow order block is a static one thing. Order flow is a series of things, if that makes sense. This is going to be in the live section on the channel. It's going to be on the live session. It's always uploaded. Yeah. Chicken can also be more profitable. Yeah. The moon cycles. Yeah. No, it's all good, Ivan. It's all good. It's all good. It's all good. It's just a bit frustrating. FTMO is a good company as far as I know. As far as I know, it's a decent company. Bro's mad about my unicorns. my nemesis. No. I'm fine. I'm fine. Yeah, I don't know, Rumpel. I don't know. I woke up and I thought, no. No, it was just because of what we talked about. No, it's all good. It's all good. ICT and SMC is, as far as I know, because I get that question quite a lot. Like, what is better, ICT or SMC? And like, we trade neither. We trade MMC, in my opinion. But ICT is, I believe, the way I learned it, is ICT is, according to him, the creator of SMC. So I think it's the same thing. So I always answer ICT, SMC, that's the same thing, I believe. But I'm not sure. Gotham City Discord. I'm not familiar with that, my friend. Not. Or am I? I think I've heard about it somewhere, but I can't really remember it. And of course, I'm making fun of unicorn, but if you trade unicorn profitably, then ignore me, of course. I'm just making some jokes, making fun of it, but a unicorn can also be traded profitably. So it's just an entry model, exactly. It's just another entry model. It can be traded profitably, and some people like it a lot, and that's perfectly fine, of course. But your background always changing. Do you always move? No. Usually I tend to stay in the same house or apartment, but just in a different room. The light was very bright in the previous one, so it was quite a struggle with the camera, etc. Yeah, that's also part of the reason, Rumples, why I ranted a little bit about it, because that's quite frustrating, of course. Like when you see a concept where you have just studied night and day to essentially get to certain concepts, and someone just becomes a student of you, takes the concept, and then just posts a YouTube video, and it's the, oh, look what I found. I found a complete new thing right here. Oh, it's just this concept just renamed. Like, come on, that's a bit frustrating. That's a bit annoying, but it is what it is. I don't want to be too busy with it. What do you think of quarterly theory? I'm to be honest, I'm not too familiar with it. If I'm honest, I'm not too familiar with it. A digital nomad. Yes, that is the current visa that I have, Mark. Yeah. That is correct. How do you create structure for your trading plan? That's a good question, Derek. And I think that's very important to understand. Structure in your trading plan starts with foundational levels as well. So understanding what steps you need to take. The first thing when you open a chart is one, understanding buys. So are we going higher? Are we going lower? Then number two is narrative. So if we are going higher or lower, then where are we going higher or lower from? So in this case, for example, the Vergelijkbaar right there. It's a narrative area. It's a PD ray. Then number three is context. Number four is the entry. Number five is risk management. Now, it's important to understand that essentially everything is about PD rays. Everything. Arguably everything. What do you think of supply and demand? I think supply and demand is okay. I can see the logic behind it. I also know people that trade profitably, so I think that's okay. Supply and demand. Nothing inherently wrong with it, I believe. Yeah, true, Ivor. True. Narrative is similar to context. The start is the exact same, but this right here is a narrative, for example, and also the start of the context where you start looking for an entry. But the context is different because this right here is your context area, for example, right there. That makes it a slight bit different because that's where you start looking for your entry, if that makes sense. All right. I usually trade with one monitor. I used to have a very big monitor, etc., and another monitor next to it, but it didn't really help anything, in my opinion. All right. Thank you, everyone. I'm going to end it here. Thank you, everyone, for being here. Have a great week. Have a great rest of your weekend as well. If you're going to watch any football games, of course, enjoy it as well. Free up your mind for next week. And then we will be back as well. I'll be more active in the Discord as well, in the public Discord. Also, if you want a free PDF, it's also in the description right here regarding PDF and the process of the previous video that we uploaded. Thank you, everyone, for being here. See you at the next one. All right. Thank you.